This is Nightly Business Report with Sue Herrera and Bill Griffin.
Bumpy ride. Earnings are strong. Profit margins are at a record. So why isn't that enough to impress investors?
Big year. Boeing powers ahead and says earnings for the rest of 2018 will be even better than they are now.
The magic number. How much money will you need to cover healthcare expenses in retirement? Those stories and much more tonight on Nightly Business Report for this Wednesday, April the 25th.
Good evening, everybody, and welcome. The Dow snapped its 5-day losing streak, but not all that convincingly. Despite strong earnings, stocks were all over the place as markets around the globe watched the U.S. bond market, where the yield on the 10-year Treasury creeped even higher, lifting the dollar. On Wall Street, the Dow Jones Industrial Average gained 59 points to 24,083. The Nasdaq fell 3, and the S&P 500 added 4. The market moves of the past few days are leading investors to wonder if last quarter was the top for both companies and stocks. Mike Santoli takes a look at what might lie ahead.
Big companies are reporting powerfully strong earnings growth and record profit margins thanks to solid economic growth and corporate tax cuts. Yet investors have been unusually hard to impress, selling off stocks despite the stellar results. Blue chip companies from Goldman Sachs to Alphabet to Caterpillar surpassed forecasts by a wide margin, yet Wall Street picked apart the numbers in a way that made the road ahead seem a bit tougher. It seems that a steady climb in interest rates and fresh signs of inflation are raising concerns that economic momentum and corporate profits have peaked. While there are few indications that earnings or the U.S. economy is close to a true downturn, the strong and nearly effortless surge in stocks from the 2016 election through this past January clearly priced in a lot of the good news on growth, profits, and taxes that are now flowing through to corporate bottom lines. Consensus estimates still call for double-digit earnings growth through the rest of 2018, with perhaps some pressure coming from higher wage and commodity costs. Investors are simply struggling with exactly how to value those earnings as the Fed raises rates and borrowing costs climb. The move in 10-year Treasury yields above 3% has also focused investors on a transition underway from a period of high growth and very low rates to perhaps moderate growth and somewhat higher rates. All this helps explain why the S&P 500 has been weighed down near the lower end of its 3-month trading range, trading at levels first seen around Thanksgiving before the tax cut enthusiasm drove the indexes on a steep angle higher. Most economic expansions and bull markets do last a good while beyond the moment of maximum optimism, so stocks can certainly recover to new highs as the economy chugs along and companies reap the benefit. The ride might simply be bumpier along the way. For Nightly Business Report, I'm Mike Santoli.
Well, Peter Boockvar joins us right now to talk more about the markets and what he sees ahead. He's Chief Investment Officer at Bleakley Advisory Group. Always great to see you, Peter. Thanks for joining us tonight. Sue. Your premise is pretty simple. The stock market was rising over the last decade as the Fed lowered interest rates and kept them at record lows. Now that the Fed is raising rates, all bets are off. Is that the idea?
Right. And QE also. QE was meant to encourage risk-taking, but that really was reflected in risk-taking in the markets, certainly not in the economy because the growth in the economy never really exceeded 2%. So quantitative tightening, you can argue, okay, well, that will reduce the appetite for taking risks along with the rise in short-term interest rates through the Fed funds rate.
So a lot of investors are looking at equities and wondering how to value them in an environment that seems to be changing with the Fed tightening up, and we also have inflation creeping in. So how do you look at the stock market and put valuations in what's a more dynamic environment than we've had in years?
It's a great question. I define the pullback we've seen so far year to date as being a PE multiple rethink, in that we've got to these at the January 26th peak, the market was trading almost 20 times forward earnings. And what the rise in interest rates led to was, okay, well, maybe I don't want to pay 20 times, or maybe it was 18 times. I only want to pay 16 times. So with no change in earnings, just the change in the PE multiple was a 300-point decline in the S&P 500, just on a multiple rethink. So yeah, getting the right multiple right is always difficult, but the market said, well, I don't know what the right number should be, but it's going to be less than what it was.
So going to Mike Santoli's point, is this as good as it gets then at this point? Or are there opportunities that you see in the market that are become evident as the Fed raises rates?
Well, unfortunately, the opportunities usually come after things fall because that's what creates value. I mean, one thing that
it's annoying that that's the way it happens.
Yeah, exactly.
That's the way it happens.
You know, one thing that QE and low interest rates did was it inflated the assets of a lot of different things. So the median price to earnings ratio in the S&P 500 got above where it was in 2000 because 2000 was just tech. Now everything got expensive. So it's a tough question to answer. I think commodities are still well below their highs. Gold and silver are still well below their highs, but there aren't that many things to find. But pullbacks are good for people that have long-term time horizons because it gives them an opportunity to buy things cheaper than what they were.
Peter Boockvar with the Bleakley Advisory Group. Again, thanks so much for joining us.
Thank you.
Appreciate it.
Well, the day was bookended by earnings from companies that are worth nearly $1 trillion combined. Boeing was out this morning, Visa and Facebook after the closing bell. So let's start with Dow component Visa, which saw its profit rise sharply as more people made payments using its network. Visa topped earnings and revenue expectations and issued a positive outlook. That lifted the stock in after-hours trading, and it just might set the tone for tomorrow.
Then there's Facebook, which posted higher quarterly profit and revenue. The company reported growth in its mobile ad business and an increase in monthly active users, and that sent the stock higher initially in after-hours trading. Julia Boorstin has more now on Facebook's quarter.
The bottom line from Facebook's earnings, all the negative attention about privacy concerns has not hurt the company's ad business, which is growing far faster than projected. While the social giant's monthly and daily active users grew right in line with expectations, both up about 13%, its revenue and earnings soared past analysts' expectations. Average revenue per user, a key measure of the health of its ad business, grew faster than expected to $5.53 per each of Facebook's monthly active users. That's 18 cents more than projections. Against the backdrop of growing scrutiny about Facebook's data practices, CEO Mark Zuckerberg saying, quote, "We are taking a broader view of our responsibility and investing to make sure our services are used for good. But we also need to keep building new tools to help people connect, strengthen our communities, and bring the world closer together." For Nightly Business Report, I'm Julia Boorstin in Los Angeles.
Boeing easily topped analysts' earnings and revenue expectations. Strong demand for commercial jets prompted the world's biggest plane maker to issue an upbeat forecast for both profit and cash flow. Boeing's CEO downplayed concerns about rising material costs. The company was viewed as one of the big potential losers of the president's tariff on aluminum. That apparently wasn't an issue today because the shares rose 4%, making Boeing the best performing stock in the Dow index. Joining us now to talk a little bit more about that report is Chris Higgins, an airline analyst with Morningstar. Chris, good to see you. So a very solid report, certainly for Boeing. Was there anything in this report that kind of raised your eyebrows or was unexpected?
Well, the EPS beat. They beat by about $1, which is a huge beat. There was some timing issues in there, lower taxes, lower than what we expected, lower research and development in commercial airplanes. There was also some defense programs coming through, so there was some timing. But they did raise their guidance by 50 cents. So we do think that there's some tangible, real business improvements at Boeing going on here. Also, operating cash flow came in really strong, $3.1 billion versus $2 billion last year. And we're really focused on cash flow at Boeing. That's been really strong, and they continue to impress with their cash flow.
Mm-hmm.
The market has largely viewed Boeing as vulnerable if there is a trade war with China, that there could be retaliation. First of all, do you buy that? And then quickly, if that's the case, do you worry about its future in the stock market?
Yeah, we're not. I don't think we're as concerned as conventional wisdom out there in the market is on the trade war with China. China rolled out some proposals in terms of tariffs, and the way they structured the tariffs on aircraft, it purposefully excluded some of the most best-selling Boeing airplanes into China. So the 737 MAX 8, it was excluded because of the weight restrictions there that China put out. So we think at the end of the day, there's going to be kind of a negotiated settlement between the U.S. and China, particularly when it comes to commercial aircraft, because really China doesn't have any other sources besides Boeing. Airbus is at full capacity right now on their narrow-body aircraft.
Very good points. Chris, thank you. Chris Higgins with Morningstar. Bill?
So as we mentioned, Boeing's CEO does not appear to be fazed by the president's tariffs on imported steel and aluminum, but those tariffs are creating a lot of uncertainty in the aluminum market itself, and that's leading to stockpiling of the metal. Kayla Tausche reports tonight from outside New Orleans.
Half a million tons of aluminum piled up. That's what you see above the banks of the Mississippi River. Football fields of metal have been building slowly for 2 years, surging in 2018 as importers rushed to get foreign aluminum on shore before the White House put tariffs in effect.
And a 10% tariff on foreign aluminum when the product comes across our borders.
That's caused uncertainty about where companies could get aluminum and at what price, compounded by the threat of sanctions on Rusal, a major Russian producer. The U.S. surcharge on aluminum delivery has soared, so companies holding the metal here are poised to profit. Take Castleton Commodities, a trading firm based in Connecticut. It's filled what was a relatively empty field in 2016. That same space outside New Orleans now holds an estimated 450,000 tons. And there's more around the country. Warehouses have sprung up near major ports, with 200,000 tons in Baltimore and 30,000 in Charleston. But the biggest is in the Big Easy.
It's the river. The river. We have, the largest river in North America. We are the petrochemical corridor for the nation.
Amos Cormier is the local leader of one town housing a stockpile. He hopes the tariffs bring better-paying manufacturing jobs once the surge in port activity dies down.
In my opinion, those would be better jobs to have than just, stevedores or the offloading of coils of aluminum.
We tried to get more detail on the shipments, but the companies importing and storing the metal wouldn't comment, nor would the ports processing the transactions. At Castleton, a sign warned of U.S. customs violations if the bars and beams there were moved. We were turned away after driving in and asking for the manager.
Our intel suggests that stockpile, most of it was sold last week to several traders. It basically is just exchanging hands.
Jorge Vasquez runs Harbor Aluminum, which tracks the industry. He says despite the recent fluctuations, the market dynamic won't change anytime soon.
They will continue to stockpile simply because the U.S. pays better than anyone else right now on the face of the earth.
The barriers to entry put up by the Trump administration bringing big bucks for a few savvy traders. For Nightly Business Report, I'm Kayla Tausche, Plaquemines Parish, Louisiana.
General Electric's outlook was revised by Moody's to negative, and that means the credit agency could downgrade the stock in the not-so-distant future. That sent shares 4% lower, extending its steep losses over the past year. The revised outlook comes as investors attend the company's annual shareholder meeting, and a lot of GE retirees are not happy. Morgan Brennan is in Imperial, Pennsylvania.
For the first time, General Electric CEO and Chairman John Flannery faced shareholders, many of them retirees, at the company's annual meeting.
We're keenly aware of the pain that our performance has caused and the dividend cut has caused with investors, with retirees, with families. We know how much you rely on this, and these were decisions taken really with extreme deliberation.
Flannery, who took the helm last summer, said he's focused on making the struggling industrial behemoth simpler and stronger, adding that changes are underway at every level of the company. One example, the board, which was remade today, shrinking from 18 directors down to 12, including several new additions. For the event, several hundred shareholders, some protesting before going in, showed up, making the trek to a GE facility on the outskirts of Pittsburgh. Many are retirees like Susan Strauss, who worked as a machinist for the company for 3 decades and came to hear more about the CEO's plans for a turnaround.
We're all very concerned about our security. We depend on our pensions and we depend on the dividends, and they reduced the dividends by half. And yet they encouraged us to buy their stock when we were employees because they matched it 50%.
And have you sold any of your stock, or are you hanging on to it?
I want to sell the stock. I should have sold it a long time ago, but to sell it now, I would take an enormous loss.
GE stock has lost half of its value over the past year, and so too has the dividend, after a cash crunch caused the company to make a cut. That's been especially hard on the blue chips retail investors, which make up more than 40% of GE's shareholder base.
These are the prime shareholders that you see here, the ones that spent their whole life working in the shop, day by day, making money for General Electric their whole life, 25, 30, 35, 40 years. And those are the shareholders that really mean something, and those are the shareholders that GE is hurting.
For Nightly Business Report, I'm Morgan Brennan in Imperial, Pennsylvania.
By the way, the New York Stock Exchange today suspended trading in Amazon, Alphabet, and a few other companies. The NYSE said that a data glitch affected stocks with prices above $1,000, which trade primarily at the NASDAQ. The stocks did trade normally on other exchanges.
It is time to take a look at some of today's upgrades and downgrades, and we begin with one of those companies affected by the NYSE data glitch, Alphabet. Its rating was raised to buy from hold at Stifel. The analyst cites Alphabet's more serious approach to the security and privacy of its consumers. The price target is $1,234. Shares rose just a fraction to $1,022.99. Disney's rating was raised to market perform from underperform at BMO Capital. The analyst cites the company's focus on the direct-to-consumer market. The price target is $100, and that's pretty much right about where the stock is trading now. It's at $101.15.
Still ahead, a major cost concern for those saving or already in retirement. Comcast has confirmed its $31 billion bid for European pay TV operator Sky. It has already prompted Sky to drop its support for a lower offer from Rupert Murdoch's 21st Century Fox. During a conference call today, Comcast CEO Brian Roberts said that a Comcast-Sky get-together makes sense.
Love our core businesses, and anybody who's viewing this as some diversion from that is not reading us properly, in my judgment. We didn't choose to put Sky in play or any other asset in play. That event happened around us. And the question is, do we take a look at it and engage?
Separately, Comcast earnings and revenue were out this morning. They topped Wall Street estimates, helped by the Winter Olympics and the Super Bowl. Shares rose more than 2%, 2.5% actually. And we should point out Comcast is the parent company of CNBC, which produces this program.
Twitter reported its second profitable quarter and blew past analysts' estimates for earnings, revenue, and monthly active users. But a softer outlook from Twitter's management pressured the stock, sending shares down more than 2%.
AT&T shares drop after an earnings miss, and that is where we begin tonight's Market Focus. After the bell, the telecom giant delivered weaker than expected profits and revenue, even as it added more customers during that period. Shares initially fell in after hours, but did finish the regular session up a fraction at $35.20. Also out after the bell tonight, eBay said that a rise in active buyers helped sales rise, but they failed to climb at the pace that analysts were expecting. Earnings, though, were in line with estimates. Shares initially fell in the extended hours session. They also ended the regular day down a fraction at $40.97. And a decline in costs and a smaller exposure to Affordable Care Act markets helped health insurer Anthem top profit expectations. The company also hiked its earnings guidance for the full year. Shares rose by 6% to $238.84.
An increase in shipments helped railroad operator Norfolk Southern's profits and revenue to rise. The result topped analyst expectations. Norfolk also said it is planning to launch $1.5 billion worth of share buybacks this year. The shares climbed 8% to $145.96. Viacom topped Wall Street expectations as the media giant said strength in its international TV division and stronger performance at Paramount Pictures helped its results. The company also reported a smaller than expected decline in ad spending. Viacom said the results show that its turnaround is picking up momentum, and investors seem to agree. Shares finished up nearly 1% to $31.18. And Tupperware said softness in several of its foreign markets caused its sales to fall and miss estimates. Earlier this month, the storage products maker warned that its quarterly profits would be weaker, and they were, but apparently not as bad as Wall Street had feared. So shares finished the day up 9% to $46.28.
So, how much money will you need to cover health care expenses in retirement? Well, whatever it is, a new report finds that nearly half of all workers do not think they will have enough. And in fact, only 1 in 5 have actually crunched the numbers. Our senior personal finance correspondent, Sharon Epperson, has done some digging. She joins us now with that magic number. Is there a magic number, or how much are you going to need?
There is a magic number that people may be a little frightened by. And for a 65-year-old couple retiring this year, they'll need $280,000 to cover health care expenses in retirement. Now, this assumes that they're both already eligible for Medicare. And the good news is it's only 2% higher than it was last year. So we are seeing Medicare premiums relatively flat, out-of-pocket prescription drugs also relatively flat over the past year or so.
Okay, so that key number is 65 years old.
65 years old,
What if
right.
you retire earlier? A lot of people, want to travel and do things while they're younger. What if you retire earlier?
That's interesting. That is what we assume, that they're retiring earlier because they want to travel. Many people are retiring earlier because of a health care issue. The median retirement age, according to the Employee Benefit Research Institute, is 62 years old. And so when you're retiring early, if you're able to get health care coverage, you may still have to come up with an extra $500 a month in premiums. You may also have to dig into your personal savings if you haven't saved properly. So these are all things that are a concern to people who are retiring before 65, because of course that's when Medicare kicks in.
Let me go back to something you said. How do you get the health insurance if you retire early?
If you retire early, the first thing you want to do is check to see if your employer has a retirement benefit program for health care that you can participate in. The other thing are the COBRA provisions. Those last for up to 18 months. So strategically, if you want to retire early, retire at 63 and a half. That exact number.
Okay.
And then, of course, also the Affordable Care Act provides a lot of provisions for those between 55 and 64. You're going to want to look at the various options that you may have with that, but talk to a financial advisor and accountant, too, to see if you can plan with your income to get some of those tax credits and subsidies to lower that amount, because that amount could also, at full price, be $1,000 a month.
A lot of people feel like they have to work longer because they haven't saved enough. What if you retire after age 65?
Well, you have to look at all the different Medicare programs and make sure that you apply immediately for Medicare Part B. You want to make sure that you get that medical coverage and you don't wait, because you could be penalized if you wait to get that. The other thing is considering a Medicare Advantage plan. That will cover your dental and your vision expenses. You may want to look into that. Medigap, also important if you want to get some type of coverage for copays and deductibles and all that. The most important thing for anyone, regardless if you're thinking about retiring right now or you're going to retire at 65, always look at what the options are for you. Look at that open enrollment. No one ever wants to, you're smiling because no one ever wants to look at that material, but it can change.
But it can change,
It
absolutely.
can change, and you can get a better deal. You never know.
Well, you've got me thinking, that's for sure. As always. Thank you, Sharon Epperson.
Sure.
Coming up, China's car revolution.
As demand in China for U.S.-made cars and trucks continues to grow, so does the appetite of the United States for vehicles made here in China. I'm Phil LeBeau at the Beijing Auto Show. That story coming up on Nightly Business Report.
Ford reported a rise in profit that was better than expected, helped by lower tax rates and cost-cutting measures. The automaker is facing rising commodity costs, and it's trying to take advantage of the recent consumer shift towards bigger vehicles. The stock rose initially in after-hours trading.
And speaking of which, electric cars and SUVs are getting a lot of attention at the Beijing Auto Show. This year, for the first time ever, Tesla is at this show, trying to take advantage of new opportunities in the world's largest automobile market. But as Phil LeBeau reports now, there are also a number of challenges.
With nearly 100 unveilings of new models, the Beijing Auto Show is all about who can get the most attention. And by that measure, Tesla is doing well. Its models are a common sight around China, and last year, almost 1 out of every 5 Teslas sold in the world was in China, where the government is encouraging citizens to buy an electric car. Many Tesla buyers have gladly paid well over $100,000.
还是它的功能上，还是使用上。
From the design, from the function, from the user experience, Tesla is really good.
While Tesla has created a growing and loyal following here in China, this is also where it faces more challenges, especially as the Chinese auto industry becomes more competitive both here and around the world.
In the last 2 or 3 years, there have been 23 new Chinese electric vehicle brands that have been introduced. Not all of them are producing cars yet, but of those, there will probably be a handful that are true Tesla competitors.
More and more Chinese automakers plan to eventually sell cars in the U.S. Already, the Buick Envision is imported from China, as is the S90 sedan from Volvo, whose CEO says Americans have embraced Chinese-made models.
It's a Volvo, and we guarantee the quality is okay. If it comes from Sweden, Belgium, or China, it's really of a secondary interest.
In the auto world, what rolls on the roads in China is increasingly rolling on the streets of America. Phil LeBeau, Nightly Business Report, Beijing.
And before we go, here's another look at the day on Wall Street. The Dow gained 59 points, the Nasdaq fell 3, and the S&P 500 added 4. And that will do it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. I'm still calculating Sharon's numbers there.
Don't.
Have a great evening. I'll see you tomorrow.
Actually, we should.
As we should.